Hi, this is Jeff from Alpha Charts with a state of the market video. Today is February 26, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, and so let's start with the SPX as we always do. Coming into this week, we were pretty bearish overall, because we were right here at the potential head and shoulders top, and as the week progressed, we actually violated it. Right, this is where Russia attacked Ukraine, and we saw the reversal on giant volume. So now this is, in my opinion, the really important area, right? So I'm just going to put a little marking here. Oh, the magnet's on, so sorry. There you go. Yeah. So that's an area that looks like it could be important. And going back, yeah, there's maybe some area here. It's not huge. So I'm just going to keep this right here for now. So this is the new area that really has to hold. I still think, if it comes down into the area, that's a problem. But the price action was good, right? Thursday and Friday. Now, again, let's not get too ahead of ourselves, because you still have a declining 50-day moving average. You have a flattening 200-day, price below both, price underneath a declining 23-day. There's a lot of overhead supply coming in here. The Fed is still potentially raising rates, even though I think only a 0.25% increase, maybe a relief to the market, which maybe they're trying to price that back in instead of 0.5. I don't know. But either way, the moving average is declining, the price underneath everything. So it's not a healthy market yet. Is this encouraging price action? It is. Is it time to go all in? For me, it's not. Now, let's be honest. We get above the 200-day, and that changes things, right? The 50-day starts to flatten out. That changes things. But that could be over the next week, 2 weeks, potentially. Does it go straight up? Maybe. I mean, I think there is a divergence on the relative strength index. There, I had it up there already. Yeah, if you notice, there's a divergence here. That's kind of encouraging. They're messing around with all my stuff, and so now things aren't exactly the way I like them. Yeah, so it's encouraging that there's been a divergence here. But as you can see, this is from Trader Marcuse, this other indicator I keep down here sometimes. This is there's still some distribution going on, in my opinion, but I do think that this is encouraging. Is it just a bounce? Is it more than a bounce? We don't know yet. Let's see if any of the other things will give us any hints or clues. But again, I still think it's the right thing to be cautious. Again, above the 200-day, 50-day starting to flatten out, or price above the 50-day, that would be very encouraging. But we're not quite there yet. All right, let's see what the RSP looks like. RSP equal weight again. Now this one is much more encouraging, right? Again, I don't look at these ahead of time, so this is all in real time that you're seeing this. Yeah, above the 200-day, above the shorter term moving averages. The 50-day is declining, but that's a much more encouraging look to it. Okay, well, that's good. Perfect. This area held, never even got violated. I think it still is the important area. All right, I like that. QQQ. Very similar to the SPX. You had the violation, you had the nice reversal. You're gonna have this cross of the 50 and 200-day, just shows you how much damage has been done. Didn't quite make it to my target, had about 5 or 6% left. But that's okay. Like I told you, it may not make it all the way down here, because if buyers want in, then they want in. Maybe this rolls over, maybe it doesn't. It's still under the VWAP from this low. It's under the VWAP from the high. It's under all of its key moving averages. So it's still a little suspect, right? Again, Qs have been much worse than the SPX because they're so tech heavy and so growth heavy. Looking at the bigger QQQE equal weight Qs, look right where it stopped. So that's the VWAP from the COVID lows, right? Those are COVID lows. I put a VWAP on there, and wouldn't you know it, it's exactly where price stopped going down. Coincidence? I don't know, maybe. You do have the cross on the equal weights, shows you broad-based selling happened on the 50 and the 200-day here. Again, prices underneath all that, they're all, 200-day is literally flat. 50-day is declining pretty good clip. Again, suspect, yes. Is this encouraging? Absolutely. Time to load the boat? Not for me, not yet. It's got some more work to do on the indexes. Again, mid caps, again, you have the cross. Again, encouraging, yes, but not completely sold. IWM, it held right where it really needed to. Again, declining 200-day, pretty sharply declining 50-day. I can't guarantee this isn't a short covering rally. I can't guarantee that this isn't just a snapback because it got too far extended yet. IWO, very similar, again, declining 200-day. But now this one almost got all the way to the target, which is kind of interesting. So I guess that may be encouraging that it didn't violate or go into this target. I think this is a new area, right? Even if it comes around and retests this area, that would, and this holds, that would be almost, I won't say fine, but that could be the way that a bottom is formed, right? Because bottom is a process. Very rarely do you get these V bottoms, which is why so many people were looking for that double bottom or one more higher low or something like that. They weren't expecting this to be the bottom, if you remember. That's from the COVID lows. So with that being said, just wondering if the VWAP held over here too. Okay, no, it's below the VWAP now from the COVID lows. That's kind of interesting. And it came up to it, and that's where the resistance was found. So that's kind of interesting. Anyway, bottoming is a process usually. So this is encouraging. That could be the start of a bottom, right? We could even, do something like this, and then this trend line could be interesting. Anyway, that's on IWO growth. It's encouraging. It didn't, it got almost to its target, which is fine. And then let's see if it starts to chop around in here and then starts to move higher this way, letting the 50-day catch up, and then maybe giving a chance to start to let it flatten out and then move higher, right? May not happen in one session. It probably isn't going to happen in one session. Probably be, a couple weeks potentially or longer. Looking at financials, we like them to be participating, again, maybe they're pricing in less of a hike than we thought. Who knows? But they're sideways. They're flat. They're above the 200-day, so they're holding up fine. They're below the 50-day. Everything's kind of this messy chop. SMH being more important in my book. Again, it started to break down, reversed like everything else. 200-day technically is still rising while the 50-day is declining. I guess that's encouraging. If price gets back above the 200-day, that'd be very encouraging. So SMH performing better, held where it had to. We'll see. Roll over here, and I still think this 220-ish area, 221, 220 is the area that has to hold. We may see one more leg lower. We may not. I don't know. This 1, 2, and this may be some kind of 5-way pattern into here. Right now it is under 200-day, so it's suspect. 50 days declining, it's suspect, right? Wood hasn't been much of a sign, or because it's not doing something different than the market is doing, right? We're looking for a leading indicator. It dropped off and kind of came back and whatever, still above this area, which is the important area. So not much of a signal there. The VIX short came in some, which it did. It's still at 27, so it's still elevated. right? So you're not out of the woods yet. Put call ratio. Let's switch to this. Get rid of some of these moving averages because I don't like them on my put call ratio. All right. So you got some bearishness, right? And maybe this was enough, right? This one with a little bit more in here. Maybe that was enough, right? Maybe we don't need to get all the way to 1.4. I still think that there's a chance that we do get a final capitulatory move, right? One more big thrust. Don't know what the catalyst for that would be. Don't really care what the catalyst of that will be, but there's a chance that you're going to get that one more thrust into this range. And does have to get all the way to 1.4. It may not need to, but that if it got 1.4 or higher, 1.5 ish, that would be, I think, very significant. So again, bearishness seeping in, and then obviously the last 2 days things have turned much more neutral. Yeah. So put call, not a strong signal. I'll call this a weak signal that maybe the bottom or a bottom could be forming. Again, one more thrust taking out this high, right? A higher high here, even above 1.4. That would be for me like I won't say an all clear, but a great contrarian signal. Let's look at breadth, value line geometric. All right, so the value line is still below. Let's turn this back on. Yeah, so value line geometric index is a breadth indicator, and it is still below this area. It has broken down, it's chopping around. A retake and to get back in this range would be the positive. A rollover here would be the negative. Where could it go? I mean, probably here, 560-ish. I'm gonna put a new line in there. Maybe. Yeah, look at that. Held, that's actually where it held right there, right? That's kind of interesting. Then there's this area right below it, right here, which would be the one, if it falls and breaks through here, that's where we go 550, we'll call it. But look, interesting spot where the value line did hold. So breadth held in an interesting spot. Let's look at MMFI, percent of stocks above the 50-day moving average. We did see that recovery. It never got below 20%, which was low. Again, I'm looking for, I'm not saying I'm going to get it, but I would love to see one more capitulatory move lower, get below this 10%, or get close to it at least, and then again have that bottom form. Lower highs on breadth so far, right? Happened for a while. So again, not great breadth. It's been in this range for a while. It's been a tough market in this range, choppy market. Again, one more push lower. Again, whatever that catalyst is, it obviously wasn't Russia invading Ukraine, but it may be monetary policy based or something like that. Who knows? Or something changing in that skirmish or whatever. Who knows? I don't want to guess. But one more catalyst lower to push into here would be, again, all that kind of culmination together, and we'll talk about that at the end. That would be interesting. So bonds for a while looked like they were going to move higher. And if you look at the bar, it was really ripping, right? And then, but on the closing basis, you don't see that because it's just not there. Put that down there. Yeah, so it's still held, nothing to see. I look at this on a closing basis because that's all I care about. And it reversed quite a bit, still in a range. Again, this is telling me the bond market isn't freaked out with the war, with anything going on right now, with raising rates. They're not freaked out, which makes me think that this is not going to be prolonged, protracted, terrible, no good, very bad. I think that this maybe a bottom is forming. Maybe we've already seen parts of the bottoms. Maybe we see one more test in this range to come. But overall, I'm happy to see the bond market not freaking out like this. 10-year rates, I haven't looked at that in a while. Let's take a look here. It's still in that 2% range, 1.985. So nothing to see. It's not ripping out. That's what I would worry about. It kind of reversed, and then now it's just chopping around. No signal there. Gold, I thought, gold ripped out of here, which is great. Let's go weekly, easier to see. It ripped out. Maybe it's still coming. Now it's got to overcome this green area, and that would make things more of a bearish tone, defensive tone. It's, come in just a little bit. Again, this is a gigantic pattern. It could take weeks or even months to do this. So, it is what it is, but definitely something to keep your eyes on and see what's happening there. And looking at Bitcoin, it's still under 40,000. You have, this is the weekly chart. It did hold very similar looking to a lot of the actually indexes, which just shows you it's the riskiest of the risk assets. And that's how we're looking at Bitcoin right now, riskiest of the risk. So basically, if it starts ripping to the upside, it may be leading the risk assets to the upside. It's not quite doing that yet, right? It's not quite doing that yet. Let's throw on some of these moving averages. Where's the 200? There it is. Where's the 50, 23-day, 9-day? That's fine. Going to a daily chart, because I think that's where we're going to see this better. And as you can see, there's your 50-day right here, the blue line. There's your 200-day starting to turn down. 30,000. That's about where things have to hold. I think a Bitcoin move to 30,000 would be maybe that capitulatory move that is needed. This is from VWAP from this bar right here, and that's kind of held. VWAP from the top, it hasn't even sniffed it. There's a lot of damage in the Bitcoin chart. One more push down, that would be potentially bullish. You are getting a divergence. Again, lots of divergences on the chart. Remember, there's always a divergence if you look for one. So just be careful using divergences too much on the relative strength index. But again, a lot of work to be done on this chart. So wrapping it all up, I think there has been some very positive looks at the end of the week when people were expecting things to be very negative. And that's good, I guess. You're seeing, especially in some of the, equal weights, that's a very positive sign. But you're also seeing, so much damage has already been done that I would expect this, if this is the start of a bottom, and it could be, that it's going to be a process and not a V. If I had to choose, would love to see one more push lower to really shake out the bulls, get sentiment bearish again, whatever that would happen to be, and then all these moving average, then prices really start to carve out a bottom at that point. That is how I'm seeing this. No idea. Again, positive. So a few positive developments. So maybe some green shoots, and we'll have to see what the week brings, right? I wouldn't rush into anything though. We're still in February, right? There's a long year ahead to make your year. Let's make that year when we know the wind's at our backs and we're we got things going in our favor. Not seeing that quite yet. Maybe next week will be different. Maybe this will, maybe this week we get above the 250-day and we close it, above 370, right? That would absolutely change my mind going into next week. That would be super bullish. And there'd be tons of setups to look at. But right now, I just don't see it. All right. You all have a good day today. Take care. Stay safe out there. And